All right. Good morning, GMGM friends. Welcome to today's space, the Kinto spaces, as I like to call them, as they are actually officially called. If you are scheduled to speak today, please make sure to send in the request. We'll pull you up and commence today's conversation, which is about one of my favorite topics: ship or shill. Are we building hype or are we building products? Now, this is a conversation that I'm really, really excited to have. And who better to have it with than these beautiful people that are with us right now? Let's welcome all of our speakers. I'm going to pull up each and every one of them in just a second. We've got Trade Tomato with us today. Hello, sir. How's it going?
Hey, GMGAGN mates. Super delighted to be here, and thanks for having me on stage. For those who don't know me yet, I'm Daily, BD and core team member at Trade Tomato. We're a crypto trading automation platform that lets you effortlessly manage your strategies across CeFi and very soon DeFi. Our mission is pretty straightforward: to simplify your crypto journey and help you grow your wealth without it feeling like a full time job. We believe your crypto should work for you around the clock, even while you sleep. So, really excited to connect with you and dive into today's discussion.
Absolutely. Thanks for jumping in. We appreciate having you here, sir. We got a PAI3, the man, the myth, the legend. Always a pleasure to talk with such an experienced mind. Hello, Pi. How's it going?
It is a pleasure to be here. Thank you for having me here and for the very warm intro. And hello, everyone. I'm looking forward to this session today. If I'm expected to tell a little bit about Pi3, it's basically about giving you a container to store your data, run your agents privately, and to protect your identity and to make money while doing it and have a lot of fun. So, looking forward to the session today. Looking forward to talking to all of you. And again, thanks for having me. I'm excited to be here.
Thank you for joining. Of course, we have also got the co founder and CEO of Kuma. Kuma. Interesting. Mr. Alex. Hello there.
Hey, what's up, man? How's it going? Appreciate you having me on. Love the topic. I've been building in the space for almost a decade now and seeing all the cycles of hype versus build and the impact that can have. So I think some great questions and discussion will be coming here. A little bit about Kuma. So we're a high performance layer two perpetuals DEX built by the team behind IDEX, which is co-founder of, which is actually the top DEX from 2017 to 2019. On Kuma, we deliver gas-free millisecond execution combined with deep liquidity and above all, true self-custody. So the goal is to give you full control of your funds while a product that rivals centralized exchanges. Happy to talk to anyone after the space a little bit more about the product if you're interested. And yeah, excited to get the conversation underway.
Absolutely. Thanks for joining. We have also got Die Network. Hello there. How's it going?
Hello there. Pleasure to connect.
Um, Pleasure to connect as well, Die. But
Yeah.
you appear to be really far from your mic. I don't know why it
Yeah.
sounds like that.
Yeah.
Try reconnect.
Yeah. The last time I was here, you're saying the same thing that the mic is out like very far, but just I'm just having like the headphone and the mic is like in front of me, and I don't understand why it's still feel like my voice is a little bit like small, right?
Yeah, yeah, exactly. It's kind of sounds like you're far uh from the from the mic.
Yes, but could you still hear me clearly?
More or less, more or less. It's much better now.
Yes, okay.
GMGM.
Maybe I can introduce and then maybe I change to my phone to make it
Sure, go
better.
ahead.
Yep. Okay, let me introduce a little bit, then I'll change it. So I'm Joy, I'm the head of marketing at Dye Network, and we're building like emotionally intelligent AI assistant on Solana. And you can imagine that our AI that doesn't just reply, they actually understand you. And we focus on like privacy, digitalizations, and also making AI like feel more humans. Yes, so that's a little bit about us, and a quick head up for everyone like listening in that we're currently having our no-sell event, which early supporters can grab a piece of the network and help power our emotional intelligence AI at the edge. And it's a big moment for us in the community, so feel free to check out after DMA. Yeah, thank you. That, that's about us.
Thanks for joining. Open loot. Is this Ryan? Ryan Gosling? No, excuse me, Ryan
Reynolds,
Reynolds.
Reynolds.
Go ahead.
Hey guys. So is hype or build? Is this hyper liquid or build from? Is this a space about hyper
No,
liquid versus Ondo?
no,
No. Okay.
no. You might be on the wrong space, but it's fine. We'll take you anyway.
No. Thanks. Glad to be on here. Thanks, guys.
All right, let's go over the room quickly because I have a lot of interesting topics to discuss with you guys. So, what else? What else? What else? X Rocket is with us in the house. X Rocket, how are
Hey,
things on the Telegram side of things?
am I audible right now? Everything's fine? Can you hear
Yes,
me?
sir. Everything's good.
Super.
Clear.
So everything's fine. Thank you. My name is Max, community manager at XRocket. I want to remind that XRocket is a first full-fledged CX on Telegram. Everything is fine on Telegram. Maybe you have heard about Telegram gifts boom. We're into that. Also trying to being on the hype wave, and we'll launch the quite big event here to the listing of digital gold by Tether. Maybe you heard XAUT, the ticker is XAUT. And we're doing a giveaway of the Telegram gifts. It's like 3.5K of USDT. Yeah, the cost of the gifts. So everything's cool. Yeah, uh, happy to be here. Thanks for having me, of course. Have to say a lot of interesting things today. So yeah, thank you.
Yes, and indeed, a lot of interesting conversations is about to happen. We've got Triad in the house with us. Prediction markets on Solana. Triad, go ahead and introduce yourself really quickly,
Hey
please.
everyone, GM. I'm Luya, BD at Triad, the largest prediction market on Solana right now. Thank you. Super happy to be here again and grateful for this space. At Triad, we are building a new way for people to bet on narratives like markets and memes. So we recently launched a lot of things, and I am excited to connect, share what we've been building, and learn for the last review. So appreciate you all for tuning in, and let's talk about hype versus build. Let's go.
Let's go indeed. Before we jump into today's conversation, one last but certainly not the least of our speakers that just joined is Mocha. Hello, Mocha. Like the emoji, of course. How's it going?
Hey guys, can you hear me correctly? Because on the previous space,
Oh yeah. Oh
it
yeah.
was
We
as
can
if I
hear you
was
just fine.
shouting.
No, 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 no.
Perfect. Yeah.
It sounds very good.
Nice. Well, thank you very much for having us. I'm not going to say what we are or what we're doing. Maybe it comes out naturally in the conversation, but thank you very much for letting us get up on the stage late. So, yeah, excited for a conversation and definitely hype versus build. You need the right kind of balance because you don't want to base your whole growth funnel through just one of them, but you definitely need the other one in a good percentage. So yeah, excited for a conversation, guys.
Excited to host you. Now, we are really packed. I would appreciate if you guys could raise your hand in while we talk. And if you have a take, please raise your hand and I will introduce you. But I almost forgot, Mr. Marcelo, you are hiding in the speakers, man. Over to you, Solban.
Let's go. I was gonna be like, not again. No, I'm kidding. It's all good, bro. Quick introduction. Marcello, head of spaces here at Soulbound. We are a Streamify platform, but unlike all the other platforms, we've also got AgentFi and prediction markets. TG coming up very soon. Currently got an IDO sale right now. Check out our pin post. But that is enough for my introduction. Let's get into it.
Let's get into it indeed. And we shall get into it. But actually, I would like to ask our very own Kinto. Is this Hannah by any chance?
Yes, yeah, it is.
Hello, Hannah. How's it going?
Yeah, good. How are you?
I'm good. I'm good. Could we get a quick introduction of Kinto, what we do for those that don't know, and we can dive into today's topic?
Yeah, sounds good. So hi everyone, I'm Hannah. I'm the COO at Kinto. Kinto is the first modular exchange. And what is a modular exchange, you might ask? Imagine a world where you get the best of centralized exchanges, the security, the UI, the best of DeFi opportunities in one place, as well as other things like RWA, such as stocks and tokenized gold and things like that. So, for example, on your Kinto wallet, which comes with insurance out of the box, by the way, you can lend ETH via Aave on Kinto, borrow USDC, hold and buy stocks like MicroStrategy or Google, all while having open positions on Hyperliquid on Kinto and utilizing Kinto's chain abstracted swap capabilities. The possibilities are endless and growing all the time. So that's, quick overview. And I'd just like to say thank you to everyone for joining us for this Spaces today.
Thank you for a nice introduction. Now, let's dive into today's topic. And we're talking about ship or shield. Shill. Hype versus build. Are we building? What are we building? And what works in Web3? Are we actually the backwards industry that everybody blames us to be? Let's figure it out. In your experience, what drives more traction in crypto today? Shipping working products or shilling narratives? Soulbound, I believe you have a great take on this. Go ahead, Marcel.
Yeah, this is a really good one. So I do think it's kind of look. I'm a if there's anybody that believes in building an actual product the most, it's me. I definitely believe in that. Although at the same time, we live in an industry. We work, or we're part of an industry that is completely dependent on, or if not, is fueled by speculation. So I think for a long time we've seen a lot of stuff. We've seen a lot of folks, I mean, shilling before delivering. I think that's transitioned a bit. Us as a Streamify platform, we work a lot of Web3 games, and I remember for a very long time, a lot of projects would launch tokens before there was anywhere close to having a tangible product. That narrative shifted a little bit. I think people kind of got fed up of that little spiel, and it's like, okay, well, I'm not gonna spend any money or any time on a project that hasn't at least focused a little bit on building a product. I still think we have more work to do, but I would definitely say it's kind of a sweet spot between the two, right? I definitely believe you need to build an actual product, you need to actually ship, but at the same time, you also need to find a way to drive hype, right? To drive excitement, to drive enthusiasm, as that is what fuels a lot of this industry. Speculation, man. People want to get in and find that 100x. Now, obviously, you can't just depend on that. I think if you're just shilling and you're just pushing a product or a service or a protocol or whatever have you, it's not sustainable long term. You might get people on board, they might get excited for your TGE, and then TGE happens, and then it dies out. Everybody sells their bags, and they're on to the next shiny object. We see that time and time and time and time again every day in this industry, and I think we're finally, I'm hoping at least, we're getting into a place where that's kind of shifting away a little bit. And a lot of people are maybe tired of seeing that narrative. And it's like, okay, what are we actually building here? I'm hoping that we keep going in that direction. But while we're still in the place that we're at, as in this beautiful world of crypto, I do think that there is uh, a lot of hype that does drive speculation, which drives the behavior you want from the folks in this little world that we're in. So my answer is you want to hit the sweet spot between both. I think that you definitely have to build a real product, but it's like the saying that goes, if a tree falls in the forest but no one hears it, did it really fall? And I kind of think of that a lot when it comes to marketing and generating hype, right? You could have the best product, the best protocol, the best game, the best whatever, but if you don't have any hype behind it, unfortunately, I think within this space at least, it's going to be hard to get people behind it. So I do think it's finding a sweet spot between both realms. Please don't spin this around. You definitely need to ship something tangible and a real product, but I do think hitting the right tone when it comes to hype will definitely, and many times I hate to say it, could sometimes make or break it. Right? We've seen a lot of products or TGEs or launches, etc. That I personally think could have done better, but they didn't get enough people to get excited about it. And then there's the complete opposite, where people are getting everyone excited over absolute garbage, excuse my language, and I realized that I think it's a mix of both, and really finding that sweet spot. That's how, at least within crypto, you find something interesting. But yeah, I'd love to hear from everyone else. That is my take.
Absolutely, sir. And I couldn't agree more. It's a load of speculation. I think one of the good recipes for that is a great founder is a good product builder as well as a good marketer. Steve Jobs really excelled in that, in my opinion. He could really build good products, or at least envision great products, but the way he would tell the story of those products was just on the next level. Trey Tomato, I believe, was the next that raised his hand. Or to you.
I mean, I'm happy to go next, but I believe Pi was right before me. So, in all fairness.
Okay. All right. Let's be fair. Let's go Pi and then Trey Tomato then.
Thank you, Trey, and you're more than welcome to go forward. I do agree with the previous statement that you got to find the balance. But if you had to, I want to give a story. When I was, I'm an OG. I come from a very old, long life cycle of IT in all kinds of different industries, government, healthcare, whatnot, big corporations, and big budgets. I remember a time when Microsoft would announce a product, and we would, as enterprise CIOs, wait 6 months, a year, 2 years for that product to come out. And they would do that so that we wouldn't buy competitive product, whether it was email or databases or, this, I'm going back to when Microsoft was a very aggressive, ruthless type of an organization. And they would announce products 2 to 3 years in advance and then just tell you about it over and over again. And you were forced to wait. So, it's not just a Web3 thing to announce products before they're built. This has been going on from time immemorial. And people have just forgotten that the IT industry has always done that. They've announced products very, very far in advance of when they become available. There's nothing wrong with it because you lock up the market if you have a brand. So the key here is that the hype creates a brand. If you can sustain the hype and the brand with real product delivery, even if there is a time delta between your announcement and the product availability, and you are transparent or at least managing that time delta, people will stay with you. So in my view, there is nothing wrong with hyping first and building second as long as you build, which is what the previous speaker said. But what I'm really trying to say is this is not a Web3 phenomenon. This has been going on for the last 50, 70 years, where companies announce product even before they finish drawing it on the board, and businesses sit and wait for those products because they trust that brand. I think Web3 is doing nothing different. We're just moving at lightning speed compared to what Web2 used to do. That's my take on it.
Interesting. Okay. All right. Very good. Very good view of very intriguing view, I would say. Trade, would you like to respond to that?
I mean, he hit it right on the nail. I mean, there's a reason companies have marketing teams. But where I definitely draw the line is when you market something that's kind of non-existent or unattainable. But yeah, I think we've all seen projects spike purely based on hype and clever storytelling, but those narratives rarely last without substance. Over time, projects that do gain lasting traction are typically the ones that survive beyond the initial hype cycle. Typically, they pivot towards delivering real working products. So I'm with Soulbound and Pi on this. at Trade Tomato, we're firmly in the build camp. But don't get me wrong, initial narratives definitely catch eyes. But I'm a firm believer that solid products build lasting trust. And I think that's what Pi was also touching upon about that trust. And even though like, you might have that initial hype cycle narrative, is because they trust the brand behind it to deliver on what they're promising. Um, yeah, my team and I believe that delivering innovative and generally useful features, like our upcoming vaults, shameless plug, is what drives sustainable traction. And hype can spike interest once or twice, but real utility is what keeps users returning. At least that's how it should be. But on the flip side, there's definitely that danger of like, quietly building in isolation. You can build endlessly, but if you're not effectively connecting with your users or paying attention to their feedback, your efforts might really fall flat. And it's crucial to stay attentive and iterate based on real user interactions and adjust to something that just isn't working. Yeah, so in that sense, hype does offer that one advantage where you can kind of, it gets either your product or what it is that you're building in front of people's eyes and has the potential of generating valuable early feedback for you. But ideally, you want to have that balance of both narrative and product.
Yeah, absolutely. And one of the uh, like really good striking features of good product management or company management even is the way your feedback loops are set up. How do you listen to your consumers? How do you listen to your users, your core community? And we say community quite often in the space. I also believe that it is true that Web3 has a huge advantage with its concept of community over Web2. In Web3, we have something like a core contributing community with actual real power. At least we have the technological possibility to make it happen. However, I'm really curious about what extent the industry's obsession with narrative has structurally undermined innovation. I would like to turn to Kinto before moving on to another speaker. Hannah, what's your takes on this? What are your
Yeah.
takes on this?
So I think I have a slightly different opinion than I agree with a lot of what's been said. And interestingly, I have a very similar background to Pi as well, with more of a I've got more of a traditional tech background. Um, but I would say on the traditional tech side, while there is, obviously marketing and everything else, there is often clear road mapping, which I do not see so much in crypto all the time. And I also
Maybe
think
less so anymore.
yeah, yeah, yeah. And the main nets next week, main nets next week. And I think the lack of clarity around that can take away from user ability to make good decisions about where they're investing their time, things like that. I actually think overall that the space has leaned too far into shilling narratives over shipping products. And in my opinion, this cycle for me, in my perception, has been worse. And I think it's something that we should be reflecting on, like as an overall ecosystem. We prefer to build actual products or just go viral on X, like what's actually important. And a lot of this I think is driven by metrics that VCs look for, which I think aren't always great, but that's a whole other conversation. But I think the balance being right is definitely important, and there are definitely projects that I see get the balance really right, like Hyperliquid, Athena, I think do a great job of shipping and shilling their products. So you need both, but I think overall in the space, for me personally, we need a little bit too far to shilling right now.
Yeah, fair enough. I think it's been propelled by the invention of Pump.Fun and the financialization of every single pop culture unit we could think of. The way it's so easy to launch any type of financial asset that's connected to anything. Literally, Please was doing so good recently, which was just like a mocking of JD Vance. Like, I mean, crazy stuff. So that has definitely taken some part uh, away from, like, some part of attention away from real builders. I'm curious what we call real builders because, as we've heard, and I mostly agree that actually, I mean, real builders should possess the ability to actually shill what they build. um, how do you decide when your project is ready enough to be talked about publicly. Alex, I believe you had your hand raised next. Go ahead.
Sure. Yeah, I was ready for the last one, but I get it. Cool. So for me, I guess it kind of ties into the last one. I think that talking about traction without having a working product is a ridiculous concept. Traction means users, revenue, growth. It does not mean token price going up. It does not mean attention, right? If the question was attention, maybe there's a debate, but you have to have a working product. Now, to Pi's point, I thought that was fantastic. It doesn't mean that you have to have that product ready to be talked about, but you need to have something there. I think if it started with with a vision that you sold to investors, you can talk about it after a fundraise. If it's starting with some research that you're doing based on some novel insight, you can start with a research paper. But just to come out with like a brand and some kind of nebulous concept, I think is very difficult, right? You need something for people to latch onto. You need to be able to tell a story. And it's a tricky tightrope though, because talking publicly about something kind of starts the clock of that attention. Again, back to Pi's point, you need to be able to keep that attention long enough to then deliver on your promises. And if you spike too early in attention, people will move on to something else. But I think by and large, most of the successful products I can think of in crypto, they pretty much shipped first. Bitcoin, ETH, Solana being some great examples, Tether, Circle, some of the DeFi stuff that I'm more closer with. I think it was mentioned earlier, Athena, Hyperliquid. But all of those were under the radar, building great products, maybe selling it to the narrative to investors in order to get the funding necessary to deliver those products to the market. But they were not out there, shilling these things publicly, trying to get retail investors on board before there was actually some there for people to dig into.
And great point. And actually, I would really like to dive in a little bit just to touch on the VC conversation, because as Hannah mentioned, I think that's a really, really important topic, because maybe I'm thinking maybe we'll do like another space specifically dedicated to VC and their expectations. But does it go against the standard product building? And actually, is shipping without an audience a form of self-sabotage in crypto today? Or is it a sign of integrity? Can it actually work? Die Network, you're up next.
Yes. It's really interesting because the last projects that I worked with, I talked about it with like the founder, and because I'm working in the marketing side, so I always this just my opinion. I always told him that mm, like marketing comes with products. You cannot like spread out all the marketings, all the contents without like having at least like demo or like the proper products. Uh, because we didn't want to launch like with a bunch of like buzzword. We wanted to like have a demo of the product that we are building. So our like my rules is that if you cannot show it, don't sell it. And being like ready enough doesn't mean that everything has to be perfect. It just mean that you are like confident enough in your directions, and that even if like people like trying to poke holes like into projects, like you got like real answer and a roadmap to improve that. And like in crypto, like we like built inside and this has a cost as like the like first questions, like if you wait for too long, so when you dance with the shilling, you build all the marketings. But if you wait for too long, you might like miss the momentum like entirely. So we need to aim like for the balance. We ship the product, we talk openly about what's next and bring the community into the process. And I think that all our projects, like the real build, I'm talking about the real build. That's how all that they are approaching, and approaching and then have the plan for it. So I think it's really important that you have all the details, the products like ready before you talk about it in the publicity?
Hmm. That's a good take. How do we actually judge it? But with the VC conversation, I'm really curious what Hannah thinks. Have you had some instances where they go like, I mean, VCs are different, so I don't want to say like, oh, VC bed. But what are the dynamics in that, especially when we're talking about product shipment or maybe even tokenomics? If you could share with us, Hannah.
Yeah, I mean, I think all VCs are very, very different in terms of what they're looking for. And this isn't like a particular experience that I have, but from talking to a lot of others in the space who've like maybe been raising via VCs, I would say sometimes from what I've heard, I don't always think the metrics that they're looking for are actually the metrics they should be looking for when it comes to a sustainable product. Um, and some of these things, like amount of wallets, oh, we've got 2 billion wallets, and there's no way of knowing if they're real users, if it's bots, if it's anything like that. So I think there's just slightly off track. And I think overall, from what I've heard, like VCs don't value build as much as they should do in the relation of like build versus shill. Is kind of what I think. And in terms of like, what did we say, is like shipping without an audience a form of self-sabotage in crypto? I would say yes. But I also think that it's really important to be building alongside shilling. um, I think steady building overall is a sign of integrity for me, and should be for VCs. I think shilling and no building for years and years and years is questionable, and you can pull some crazy metrics in crypto, right, and not really build anything and raise a lot of money, which I think is somewhat questionable. But yeah, I think the balance of both is needed. But that's why like I'm such a fan of like iterative launches. You launch a bit, you roll it out, you get feedback, you launch more, instead of completely everything is live on day one and then it gets pushed and pushed and pushed and pushed, which we see quite a lot in the space as well.
Yeah, and absolutely incremental launches, as well as feedback loops, communication loops with the community. I think there have been really good instances where mostly we have launched. I mean, Web3 collectively have launched a really good launch campaign, but they haven't really delivered anything as good as it could have been. I mean, I can remember, I don't know how Utes were launched, how Utes were revealed, for example, and it didn't really lead to much. Instead, it was a really, really meticulously planned campaign, very hyped, but at the end of the day, it was like, oh yeah, they actually released the collection that they showed in the video being deleted. So yeah, it was a really weird era, the NFT era specifically, during crypto bull runs of 2022, 2023. It was really, really interesting. As regards to, yeah, product building, I mean, you have to roll out different aspects of the product, and maybe even meaning that you can roll out different things, such as, I mean, Yuga has rolled many different games, right? I mean, there were like the Dookie Dash and other small games which are seemingly not necessarily connected to their ecosystem, just to keep the hype up, or just to keep the relevancy in its place. With tokens, it is really different, because has the expectation of tokens warped what really defines a product? Can design itself be the actual product? That is my question. Mocha, I believe you had your hand raised next. I leave the word to you, sir.
Yes, thank you very much. And before I jump into the topic, man, you have this strange and unique ability to make the conversation flow so naturally. and have the topic evolve through the space. That's something that not a lot of people have in the space. So kudos to you, man.
Thank you, sir.
Respect.
I charge a ton of money for that. I'm just kidding. Go ahead.
Oh damn! I was just going to ask you if we can hire you for spaces. Damn. No. Okay. So here's the thing, and I come from planning background for Walmart Mexico. So jumping into Web3 in 2017 was incredibly difficult because back then, like, we were just in diapers. The industry was so young, and the things that we see create hype and gain traction right now have nothing to do with what was getting attention back then. But right now, I think that the industry is pretty spoiled in the sense that hype is king. And when you look at what people are building, if they don't have hype, like Trey Tomato and Hannah mentioned, yes, you need to have some sort of plan, of master plan. For example, when I joined Mocha, the first 3 months of work was just getting the master plan together, the communications plan together, how do we operate, how do we grow the team, how are we going to go to market, the verticals, like a lot of planning. And the founder was like, yo, when are we starting to have these audience growth, and when are we gonna get all these followers and all of that? And I'm like, okay, yes, I mean, we're gonna get there, but we need to do this correctly so that when we start the growth, we know where we're going and we know what we want to do. And here's the thing: when you question yourself and the market, what sells? It's just like Hannah says, uh, people are building for a token generation event, or like you mentioned with youths, there was not really a plan for what's going to happen afterwards. And some things stick, some others don't. But people keep iterating, and that's how Yuga came up with all of these new collections and new products, games, etc. But at what point do we need a token, right? And the self-sustaining tokenomics, it's incredibly weird because when you look at traditional finance and traditional companies, when people buy the stocks, and this comparison comes from people and the market actually thinking, oh yeah, buying a token is like buying a share on a traditional company, right? So I'm going to buy this token because speculation. And when you have this box that it's unopened and someone tells you this could have $1,000 or $10, I'm going to sell it to you for 100. Then you are like, oh yeah, this is quite good because okay, 90% of chances that I get more than the $100 that I'm putting in, right? Well, here's the thing: when you ship and you stop shipping, people realize that when they open the box, there's only $90. So how are they going to sell this for 100? So yes, speculation is a big part of the equation, but the problem is that Web3 companies in general do not have revenue share, do not have flywheels in place, and the worst part is that, well, I don't know, most people don't even know what a flywheel is. So how are they going to design it? How are they going to feel it? So yes, I do think that tokenomics and the token is important, but you need to put in a lot of thought into how you're going to create that flywheel that will feed the token and will make the company work as a stock without going with all of the legal issues that you might have to face. But you need to generate income for the holders without basing everything on speculation. Tokens go down because they just stop wondering what's inside the box, because the team opened the box and it turned out it had less than what the person paid for. So you need to keep giving boxes, or you need to change that so that people do not buy a box based on speculation. You just tell them, hey, so we generate $100 million a year in revenue, and 10% of that goes back to the holders. For example, revenue sharing is incredible. Hyperliquid is doing it, and they don't have a lot of legal issues. Why? Because they planned it beforehand. So yeah, I mean, tokenomics. I could go on for like 30 minutes on tokens, but I'll shut up because I already spoke a lot.
Fair enough. I mean, tokenomics matter a lot. How we how we construct the tokenomics. I don't blame, or I don't, praise myself to be an expert. Neither am I an economist, nor am I a developer. So I don't really know how tokenomics work, especially how to keep a token price relevant. When we're talking about a price, there are bajillion and gazillion factors that play into why a certain coin might go down, might go up. I heard a good take from Yuga founders, Mr. Garga and Gordon, that they're saying like they actually don't even look at their floor prices, which shows obviously, but for a really long time they've been uh, they've been like really high and they didn't really look at them. But as Hannah says, I think having a clear vision, and also, I mean, in regards to just making money, because most people and most projects use token launches as just a way to raise money, which is, it couldn't be more wrong. I don't know what's more wrong when you're building a business. First of all, if you're building a business, the first thing they teach anywhere, any school you go for entrepreneurship, they say you have to have runway. And in a traditional startup world, runway is about 6 months. So for 6 months, even if your business doesn't make a single cent, you have to be able to run your business like nothing happened. In crypto, I would say from 1 to 2 years is a necessary runway to have. So you gotta be able to run your business for 2 years with no external money coming in. I think that's the necessity, absolute necessity, given the volatility of the market, given the volatility and just overall craziness of the space, the industry being halfway in, institutionalized, not even taken as a serious industry sometimes. But another thing is having a clear roadmap, as Hannah was saying, because once you know what's happening, once your audience knows what's happening, then you can start building on those roadmap elements, like going on spaces all the time, having your founders become mini brands, talking on spaces. I mean, just talking on spaces is such a beautiful way of connecting with your audience, with your target audience, and with your potential users. It's unbelievable this type of communication exists, and we just found it, because the way it horizontalizes or decentralizes even, the way the means of communication is just incredible to me. However, it is really difficult to not fall in for the manipulation aspect, where, I mean, is it marketing or is it manipulation? It's a really difficult thing to say when you're paying, when every type of influencer or KOL, as we call them now, is paid basically. Um, I would like to go to Alex, who has his hand raised. Are we underestimating the psychological cost on teams who ship quietly while watching louder and emptier sometimes projects dominate the attention? What do you think, Alex?
So I think that's a great question. I have a point that I really want to make, so I'm just going to override you and say I want to talk about that last topic one more time about the question of expectations of tokens in the product. So the point I want to make here is I think it's an important one for the industry. Like, I don't blame all the teams of the last 10 years trying to figure out how to do these tokens in a legally compliant way. I disagree with the last statement that like Hyperliquid doesn't have any issues because they figured it out legally. I think it's a fortunate sign of the times that we now have a regulatory structure that is not going after founders directly for trying to build products that use this novel token kind of capital stack piece to fund projects and give back to the users. Being in the US, we've had our own fights with the SEC that just ended after 7 years, thanks to this new administration. So, that said, we're now in a position where we as an industry have to either make these tokens worth something or it's all going to go away as both a funding mechanism and a unique mechanism for bootstrapping networks. Like, people are tired of buying worthless governance tokens. They've gone to memes at this point and are tired of buying those. We need to figure out, we have a limited window where we can figure out how to incorporate these tokens into the business model, use them for what they're good for, which is distribution of those revenues and rewards to those creating the value within the network, and using it to bootstrap resources, whether that's infrastructure, data, participation in some form of a marketplace to get people going and to get these networks off the ground. So again, sorry for overwriting, but I just wanted to make that point. So I'll cede it to someone else for the other question around psychological costs.
Yeah, no, fair enough. Trey Tomato, I see your hand go up.
Yeah,
do you
indeed.
want to respond?
Definitely. Wanted to definitely answer that last question you had, but thanks for superseding, Alex. That was a good point to make. In terms of the psychological cost, let's see. I would definitely say it's a definitely underestimated field, I would say. It's genuinely tough and sometimes even demoralizing for the team that's quietly working with their head down and just trying to build something meaningful. And while flashy, often empty, projects just grab the attention and headlines. And it's something we felt at Trade Tomato as well, but I definitely believe that long-term substance tends to win out. Flashy attention fades quickly, and over time, genuine users migrate toward projects that deliver real value, and at least eventually, emphasis on eventually. Still, as an industry, we should recognize and appreciate the psychological strain this puts on dedicated teams, and which is why we should definitely do our best to support each other where we can in this space. The way the team and I try to combat this is really by celebrating small wins, stay closely connected with our community, and just constantly remind ourselves of our original mission, building something genuinely useful and lasting. And there's something powerful about quietly building under the radar. I mean, who doesn't love a good underdog story, So ultimately, those who underpromise and overdeliver, I feel, tend to outperform than those counterparts who overpromise and underdeliver. So that's my take on it.
Yeah, absolutely. I really hope the word eventually makes sense eventually. I mean, it's man. Sometimes I get lost. Sometimes, well, sometimes you have this like Web3 way of thinking. Oh, nothing exists outside of Web3, and then you realize, what are we actually doing? Holy moly. Are we building Web3 products for Web3 guys? Are we just, closing the loop? Most of the products in Web3 still feel like we are building products for each other and not for the general population. It feels like we are just pleasing the Web3 investor or a meme coin speculator, and that's it. It's super weird. I really hope we go beyond this, because unless we have a usable product, nothing matters. There's a really good quote which I often employ by Shiv on Solana, who is a really, really cool guy. He says, product first, token later. You have to first have a product and then talk about a token that utilizes some aspects of those products. Pi, tell us something we don't know.
Well, I agree with a lot of what was said, but I want to make 3 points. There's a reason why star CEOs attract top talent, because the team that's building whatever that vision is knows that that CEO is going to get attention on their product. It's some kind of an insurance policy that if you're going to toil away 24 hours a day for months and you're going to build something amazing, it's not going to be a tree in the forest analogy. It's actually going to get attention. That's one reason why people gravitate towards very flashy and very, presumably successful CEOs who can bring funding and who can get attention on the product when it's available. This is point one. Point two is, I want to agree with you that Web3 seems to be serving itself. It's an echo chamber where we talk to each other and we always are trying to sell to the degen or the speculator or the VC. But, the Web3 community is a fraction of humanity. And in many ways, when we talk about bringing real utility and real products to market, If we keep focusing on our own echo chamber, we're going to have a hard time actually getting real utility and real adoption that makes us relevant at a broader scale than Web3 is today. So I think there is absolutely, in my mind, the correlation between why we don't have great utility of Web3 is because we build for Web3, not for the consumer that doesn't know anything about the word NFT, or all these things are foreign, and yet we keep trying to convince ourselves that they'll somehow catch on and start using our stuff. They're not, because we are packaging a product in the vernacular of Web3, and that's very, very hard for others to understand. And the third point I want to make here is that, I don't think that this is a Boolean equation, ship or shill. You got to do both. You got to make sure that you are being truthful in what you're shilling, in that you intend to build it, you will build it. And if you're honest about what you're shilling there, then market forgives a lot. But if it's based on a false premise, then obviously it's going to pan out to a bad outcome. And the last point I wanted to make was about the VCs. VCs come in all shapes and sizes. VCs who are looking to bet in the early stage are looking for adaptability. They know that whatever your idea is has to pivot 15 times before it hits a product market fit. So they're looking for teams that pivot quickly. VCs that come in later, like PEs, private equity, that is looking for revenue and growth, wants the product in hand, 5 customers, 3 happy references, and some revenue, and they'll pump money in to let you grow 100x. So, and the crypto VCs, which is a different breed altogether, are looking for their exit. What's my exit point? What's my multiplier? And maybe they're not so worried about your product, but more about the size of your community and how successful the TGE is, ergo equal to how soon can I liquidate my holdings and get out. So, trying to build to a VC is always a losing proposition, because VCs have a different perspective and a different need than the product. They actually don't really care about you, your product, your team. They're looking for their exit. So I would say that never ever build to a VC. They have to sign up with your vision, and you have to control and execute your vision, and not let the VCs dictate you. Otherwise, it's the cart pulling the horse cart analogy kicks in here. Who's in charge here? So those are my thoughts.
Absolutely, and the amount of VCs that I've talked with, actually, and I've talked to, the amount of VCs that are looking for an investment for a TGE is actually really concerning. I mean, you can tell a lot of VCs are like, okay, as soon as you have the TGE, we gotta sell. Like that's what they're looking forward to instead of investing in products. I'm not a very experienced person with dealing with in dealing with VCs, but I've heard from a lot of my colleagues that that's how they operate. Like that's how a lot of VCs operate. They're just looking for a quick TGE to dump and just run away. So yeah, they're definitely looking for something else. But obviously, that's the job of a VC, right? To make money. Well, is it ethical or is it not? Maybe that's a topic for another conversation. I don't know. Maybe we'll discuss it in the coming weeks. Meanwhile, Moquito, over to you. That's Mocha.
Yes. I don't know if I should say this, but it's always funny when you see these dead chain or these lowly adopted chain. Suddenly, a lot of people are talking about it, and then some people think, "Oh, so there's some VC unlocks coming on." So yeah, they're just trying to get some attention. But speaking about that, there's nothing wrong with looking for revenue or for profit, and venture capitals, of course, have their own models. But there's also another way to make things work out for everyone in the equation, both the team, the backers, which could be VCs or private capital, but also the community. And we like to call that to have a wealth generation model instead of a wealth transfer model. And what do I mean by this? It's pretty simple. When you have companies or projects whose complete or full revenue model for the users is for others to lose money, for them to make money, and the project generates money from fees or from that wealth transfer, that's fine. But you're not really generating income, revenue, or profits for the users. You're just allowing them to transfer them from hand to hand. But when you have real use cases, which is exactly what Alex mentioned, you have to have real use cases where the wealth generation is real. For example, what we're going to do, or what we're actually working on, is to let people pay with crypto in businesses through a simple QR code scan. So people will earn money. Like, let's say that 100 people refer 1,000 people. The first 100 people will earn from the fees that the next 1,000 people pay. And this is actually better than traditional finance, because when you go, people do not know this, but when people go and use a credit card, they get charged from 3 to 7%, depending on your country or depending on your bank. They're going to pay with Mocha 1%. That's a lot better for the users. And the person who referred that user or that buying customer will get a chunk of the fee. And that's creating wealth for the user while saving money to the other user, to the buyer, without stripping away money from either of us. And of course, Mocha
You
gets
know
a
what
chunk
also
of those
saves
fees.
money? Living in a country which doesn't regulate crypto. That saves a lot of money, sir. I live
Well,
in Eastern Europe where we don't have taxes on crypto. I'm gonna milk this country until they wake up and they're like, okay, 20% or whatever. Well, anyway, thanks for your yes, yes. I'm taking all of your dollars into my pockets, ladies and gentlemen. That's what hosts do. Anyway, X
let's
Rocket. I realize you
go.
haven't said Max. I believe this is Max. You
Yeah,
haven't said anything
yeah.
all space. Please go ahead.
Yep, thanks. So I'd like to say that I'm totally agree with the take of PAI3. Am I right? I'm calling it right. Okay, so yeah, we have both. We have an hype and build. We have sheep and shield. We have to do both of these things. We have a speculative part of the market like pin coins, or I don't know, at the moment Telegram gifts, NFTs on ton, or something that comes to us temporarily. And we have products. Yeah, we have to build products. We have to hype in on memes, on I don't know, fights of Elon with Trump, and so on, so on, so on. We have to attract users through the hype, and then keep them with the building good products. And even every good product needs his own